All right, let's start it off. Net interest margin, when we're talking about JP Morgan, the estimate for this quarter, 2.53%. A year ago was 2.61. Is that a concerning trend for you?
I don't think it is. I mean, you've got a different rate environment now than we did then. I think that number is going to end up being better than expected. I'm also really interested in their commercial banking business, consumer banking business, but really the iBanking, investment banking, and trading. I think those numbers are going to be much better than expected as well.
All right. Another big part of their business, obviously, the capital markets. We've seen a lot of companies going public. I think there's a pipeline of a number of other companies that were delayed by the government shutdown that could be going public in the first quarter of this year. How excited are you about that, not only for JP Morgan, but for some of the other big banks that are highly levered to the capital markets like a Morgan Stanley?
Yeah, and I think that's really important for investors. Focus on the banks that have that talent. JP Morgan, obviously, one of the leaders there. We think 2026 is going to be groundbreaking. A lot of pent-up demand, as you were suggesting, in IPOs, M&A. And so you want to lean into those banks like JP Morgan that have that talent. There's some others we can talk about as well.
All right. Is there another one that you're excited about in particular, whether it be the capital markets business or actually the deposit business? Because we also have Wells Fargo reporting coming up. Obviously, all the banks are reporting. A much more consumer deposit-focused bank along with Bank of America.
Yeah, Wells is really your traditional bank, and I think that they're going to probably beat expectations, but not by a wide margin. I think if you really want to get the juice for power of earnings, you want to lean into the Goldmans, the JP Morgans, the Morgan Stanleys. Lovely, Wells Fargo's great company, a little bit more conservatively postured, definitely going to benefit from the tailwinds of lower rates ahead. But I think if you really want better performance, you're going to lean into those investment banking.
Well, James, let me ask you about that. You're talking about lower rates coming up. Obviously, we've seen a bit of volatility in the bond market. I don't want to overblow it, but we've seen some volatility related to this probe of Jay Powell. Are you concerned about what we may see from bond vigilantes or just investors concerned about that probe?
I'm not. I think that is like a lot of these Trumpisms. I think investors need to shake that off, focus on earnings, focus on profit margins. I think in the banks particularly, focus on what they're doing with AI. You know, JP Morgan's really done a lot of initiatives using AI. I'm very interested on that call to see how that's coming through with productivity growth.
All right, one last thing. We have another regional bank also reporting this week. It's one of your picks, actually, Regions Financial. Now, this is a bank very levered to the southeast part of the nation. Do you like it because it's in that area, or do you like just the operations of this bank?
I like the operations of the bank, Frank. You know, this is a smaller cap company. They've been neglected. I mean, they've basically been sort of the doghouse. And, you know, the valuations are super compelling. And any sort of decline in rates, which we think will happen in 2026, is going to be a huge tailwind, and particularly at this valuation. So we want to go after those small caps. And don't forget to be a foreign investor. There's lots of great banks overseas like HSBC and Barclays.